Hello, and welcome back to the channel. I'm Algabot, and on this channel we break down automated trading strategies for MetaTrader 5, one piece at a time. Today we're examining an expert advisor called the Engulfing Pivot Breakout. It's a pure price action system, no moving averages and no oscillators, just candles and pivot levels. Over the next few minutes you'll learn how it maps the market using rolling floor pivots, how it reads engulfing candles to time its entries, and how its managed hedge responds when a move fails to follow through. Everything here is educational information only. So let's get started. So what exactly does this expert advisor do? At its heart, the Engulfing Pivot Breakout is a pure price action system. That means it doesn't rely on any traditional indicators. There's no moving average, no relative strength index, no Bollinger Bands, and no average true range. Instead, it builds its entire view of the market from two simple ingredients: pivot levels and candle shapes. Every time a bar closes, the strategy looks back over the last 20 bars by default and finds the highest high, the lowest low, and the most recent close. From those three numbers, it calculates a central pivot, which it calls PP, along with a level above it called R1 and a level below it called S1. Think of the central pivot as the session's fair value line, and R1 and S1 as the magnets sitting above and below it. The strategy then watches for a specific candle, an engulfing candle with real momentum that reclaims the central pivot. When buyers take control and push price back above that fair value line, the EA signals a long toward the upper pivot. When sellers do the mirror image and drive price below it, the EA signals a short toward the lower pivot. This approach is designed for liquid, actively moving markets. Major foreign exchange pairs like euro-dollar, pound-dollar, or Australian dollar, as well as gold, on intraday timeframes such as 5, 15, or 30 minutes. It's aimed at traders who are curious about rule-based, structure-driven systems and who want to understand how pivots and candle patterns can be combined into one automated framework. Remember, this is educational information only, and like any strategy, it carries real risk, and losing trades are a normal part of the process. Let's walk through the exact logic, step by step. Everything begins with the pivots. On each freshly closed bar, the strategy scans the last 20 bars, takes the highest high and the lowest low, and combines them with the latest close to produce the central pivot, the upper pivot R1, and the lower pivot S1. The distance between R1 and S1 becomes the strategy's measuring stick, so every buffer, stop, and target scales automatically to any symbol or time frame, with no fixed pip values. Now for the long entry. The strategy detects a bullish engulfing candle, one whose body fully covers the previous bearish candle's body. But it asks for more than just the shape. That candle must open at or below the central pivot and close clearly above it, beyond a buffer of 5% of the range by default. The candle it engulfs must have closed below the pivot, and the body itself must show momentum. At least 55% of the candle's own high-to-low range, and at least 18% of the pivot range, so it's meaningful rather than trivial. When all of those line up, buyers have reclaimed equilibrium, and the EA opens a buy aimed at the upper pivot. The short entry is the exact mirror. A bearish engulfing candle opens at or above the central pivot and closes clearly below it. The engulfed candle closed above the pivot, and the body passes the same momentum checks. That signals a sell toward the lower pivot. For each trade, the take profit is placed at the next pivot magnet, R1 for longs, S1 for shorts, with a minimum reward distance enforced so the target is always worthwhile. The stop loss sits a structural pad beyond a special level we'll call the failure level, so that protective level always engages first. That failure level is where the signature mechanic comes in. If price travels back beyond the central pivot by 25% of the range, the reclaim is judged to have failed, a false break. Instead of simply absorbing that loss, the EA deploys an opposite hedge leg and aims to recover on the snapback the other way. Finally, money management takes over whenever any position is open. If the combined floating profit of all legs reaches the basket take profit, set to 25 units of account currency by default, the EA closes everything. If the combined floating loss reaches the basket stop, 300 by default, it flattens everything to cap the risk. A spread filter and a one setup at a time rule round out the controls. Let's look at the actual MetaTrader 5 code. At the top are the inputs, the dials you can adjust. PivotLookback, set to 20, controls how many bars build the pivots. Break Buffer Frac, BodyDomFrac, and Min Body Frac shape how demanding the engulfing and reclaim conditions are. Fail Frac and Stop Frac govern the failure level and the protective stop, while Reward Frac sets the minimum target distance. BasketSlMoney and BasketSlMoney control the money-based exits, and Lot sets the volume per leg. Now the long block. The Boolean called Bull Engulf checks that the current candle is bullish, the prior one bearish, and that the current body fully covers the previous body. The Bull Reclaim Boolean checks that the candle opened at or below the central pivot, closed above it by the buffer, and that the engulfed bar was below the pivot. When those pass, along with the momentum checks, the code sets the stop below the failure level, sets the take profit to R1, and calls open base with the buy side set to true. The short block is the mirror image. Bear engulf and bear reclaim confirm a bearish engulfing candle losing the pivot from above. The stop is placed above the failure level, the take profit is set to S1, and open base is called with the buy side false. Finally, inside open base, you can see the real orders. When it's a buy, the code calls trade.buy with the volume, stop, and target. When it's a sell, it calls trade.sell with the same arguments. That's the whole engine in a nutshell. Now let's bring it all together on the chart. Across the screen you can see 3 dashed lines. The central pivot PP in the middle, the upper pivot R1 above it, and the lower pivot S1 below. These are the floor pivots the strategy calculates from the recent bars, and they frame everything that follows. Look at the first few candles on the left. Price is drifting along just beneath the central pivot, with sellers gently in control. Notice the third candle. It's a clean bearish candle that closes below the central pivot. This is the bar that's about to be engulfed, and importantly, it sits below the pivot line, exactly as the rules require. Then comes the key moment. The very next candle opens at or below the central pivot, but buyers step in with force, and it closes well above the pivot line, completely covering the previous candle's body. This is a bullish engulfing candle, and because it reclaims the central pivot with a dominant momentum body, the conditions all line up. The strategy signals along, and you can see the buy entry marker appear right there. Control has flipped from sellers to buyers. From that point, watch how price behaves. The following candles push higher, one after another, climbing steadily away from the central pivot. The strategy is treating the upper pivot R1 as its magnet, the natural target for the move. Price reaches up toward that upper pivot line, and the take profit marker appears as the move completes. That's the continuation idea in action, a reclaim of fair value, followed by a run to the next pivot above. Now the chart shows the second half of the story, the short trade. After tagging the upper pivot, momentum fades. Price rolls over and begins drifting back down toward the central pivot. Look at the candle just before the entry. It's a bullish candle that closes above the pivot line. That's our engulfed bar for the short setup, sitting above the pivot exactly as the mirror rule demands. Then the decisive candle forms. It opens at or above the central pivot, but this time sellers take over, and it closes firmly below the pivot line, swallowing the previous bullish body. This is a bearish engulfing candle losing the central pivot from above. The momentum and significance checks pass, and the strategy signals a short. The sell entry marker appears right at that candle. From there, price slides lower, candle by candle, heading toward the lower pivot S1. Just as before, the strategy is using the next pivot as its target, this time the one below. Price works its way down to that lower pivot line, and the take profit marker appears as the target is reached. A mirror image of the long trade, played out to the downside. Now, I described both of these as clean, textbook moves, but the market doesn't always cooperate, and that's exactly why the hedge exists. Imagine that after the bullish reclaim, price had reversed and fallen back beyond the central pivot by the failure distance, 25% of the range. The strategy would read that as a false break, deploy an opposite sell leg, and aim to recover on the snapback, with the whole basket closed once the combined result turns sufficiently positive, or flattened if the loss reaches the basket limit. So on this single chart you've seen the complete cycle. Pivots framing the market, an engulfing candle reclaiming the central pivot for a long up to R1, and a mirror engulfing candle losing the pivot for a short down to S1. Each entry is timed by a real momentum candle, and each target is the next structural pivot, not a random distance. And remember, every trade carries risk, and not every signal will work out the way these illustrations do. And that brings us to the end of our breakdown of the Engulfing Pivot Breakout Expert Advisor. We covered how it builds rolling floor pivots from recent price, how a momentum engulfing candle reclaiming the central pivot signals a long toward R1 or a short toward S1, how the managed hedge responds to a false break, and how the basket money management closes the books. Everything we discussed today is for educational purposes only, and it is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please give the video a like, leave a comment with the strategy you'd like us to examine next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.